More, let's bring in Francisco Blanch, head of global commodity and derivatives research at BofA Securities. Francisco, it's sort of a weird thing in the oil market where everyone's been making the same case for the past 18 months, and yet the price has gone from anywhere from $130 to like $65 a barrel. And I guess, where do we go from here?
Hey, Kelly. Great to see you, and thanks for having me again. Look, I think the market has been rallying on three main reasons: supply, supply, and supply. We've had Saudi Arabia cutting production now for 12 months straight. We've seen Russia, which was maximizing volumes in terms of exports for a good chunk of the past 12 months, shifting gears recently and joining the Saudis with deep production cuts as well. And then we've also had plenty of refinery issues across Europe, across Asia, and also in the U.S. So all of that's triggered the run-up in prices. And then, of course, remember, demand is not great, but it's not bad either. So that's likely going to lead to a sizable deficit and could push oil into triple digits before year end. That's our view.
Yeah, and what would you say to the bears who, having been burned by maybe being long energy at the wrong time over the past year or so, would look at an Ed Morris at Citi or others and say, you know what, once burned, twice shy?
Well, look, I mean, we've seen, as I said before, a very meaningful realignment of supply forces here. Remember, Saudi Arabia and Russia are the world's two largest exporters. And we've had a couple of very important signals in the past week or so. First is we've had the Saudis come out and extend the cuts into year end at prices that were in the mid to high 80s. So that means they're not happy with the current price point. They probably want to see higher prices. That's kind of new. We've also seen, of course, a very important change in supply dynamics in Russia, which is very visible when you look at the Russian ruble, Russian macro finances, and, of course, the strains we've seen in the Russian military and the paramilitary. Russia simply needs more money, and the strategy of maximizing volumes hasn't worked. So I think they're trying something different. And then to that, you must add that inventories are actually growing. We've had some pretty big inventory draws this week. The latest satellite data points to 25 million barrel draws over the course of a week, which is consistent with a roughly 3 million barrel a day deficit that we're going into. So I think once inventories decline, people will start really believing that the market is going to tighten. And I think the question is, when will Saudi Arabia and Russia become misaligned again? Because they've spent much of the last 12 months misaligned, Kelly.
Oh, that's interesting. A good kind of fun to think about. And finally, let's talk about, as you say, this all rests on Asia, kind of on both the supply and the demand aspect of it. But I am quite interested in what Chinese demand looks like when we're worried about the economy there, and potentially this all could hinge on whether they pick up momentum or don't.
Yes, absolutely. I mean, I think the Chinese economy is quite weak. But remember, it is weak as it relates to real estate. It is weak on the industrial side, and it's also weak on the tech sector. But if you look at other parts of the economy, things aren't that bad. I mean, in fact, China has been recovering when it comes to travel, hospitality, leisure, the same things that we've been buying in the West, in the U.S. and Europe for the past couple of years. The Chinese are now buying, right? And those are services. And oil is pretty geared towards services. So we think overall, Chinese demand looks okay on the oil side. It's continued to lead the world this year. Will likely lead the world next year. International flights are still down 50% in China. So there's a long way to recover to get back to pre-COVID levels. And that we think is supportive, even though I concur with you, the real estate sector is a mess, as is the industrial side for China.
Very interesting. Real risk to the economy in some ways, although maybe 120, 130 is demand destruction. And the energy bulls would certainly love it if this does keep going. Francisco, thanks for joining us today. We appreciate it.
Thank you.
Francisco Blanch with BofA.